Hey guys, I've been living in Australia for the last year and a half, and I'm a big fan of passive investing. So in this video, I'm going to share with you how I did prepare my portfolio to do passive investing here in Australia. For most of this video, I'm going to assume that you already know what passive investing is, but just as a kickoff point here, let's just have a quick look at a definition. Passive investing is an investment strategy that aims to maximize returns over the long run by keeping the amount of buying and selling to a minimum. The idea is to avoid the fees and the drag on performance that potentially occur from frequent trading. Passive investing is not aimed at making quick gains or at getting rich with one great bet, but rather on building slow, steady wealth over time. If you haven't heard of passive investing before, I'm going to recommend that you have a look at a couple of books. One of them is The Common Sense on Mutual Funds from John C. Bogle, and the other one is The Bogleheads Guide to Investing, and this one has a few authors. So I'll post a couple of links in the description below this video. If you are interested in what passive investing is about, maybe have a look at those. Passive investing is all about keeping your fees low as possible. And with that in mind, Vanguard ETFs are one of the best options for that. And they have this document in which I'm going to show you a couple of things here. They have a couple of standard suggestions that are pretty good. I'm not going to say that you should go with one of these, but maybe have a look and maybe you can get a couple of good ideas from this. At the moment, I'm going with a strategy that is relatively similar to this growth strategy. I have 70% in shares and 30% in more defensive options such as bonds or fixed income. So that would be this option here. Obviously, the more risk you take and more volatility you take, the higher the return. I find this option here, the 70%, 30%, pretty appropriate for my age group and for my investing horizon, as well as for my risk tolerance. So if we have a look at the ETFs that they recommend here, you can see that they play around with 7 ETFs, and they move the allocations according to whether you want to go with a conservative option, a balanced option, a growth, or a high growth option. At the moment, I do not have 7 ETFs from Vanguard because every time I buy an ETF, I have to pay a commission of $11. So at the moment, if I was to pay $11 for 7 ETFs, I would pay $77. And if I want to rebalance my account once a year or twice a year, those fees will start to pile up. So what I do at the moment is I actually only have 3 ETFs, so I made a simplification of this. However, if you are considering investing with a relatively big amount of money, if you are able to afford the fees for 7 ETFs, you are probably going to get a smoother ride than if you only get 2 or 3. So having a better look at this growth portfolio strategy, we can see which ETFs are there and how much of each ETF you should have. You can see that there's the 30% are composed of Australian fixed interest, international fixed interest, and a little bit of credit securities as well. And in this fixed interest, there's 2 of them are hedged, so they have kind of a currency protection. And then we have 31% in Australian shares, and then 18% in international shares except US, and 17% in the US market, and a little bit in property, 4% there. You can have a look at the top 10 holdings. You can see what the sector allocation is and the regional allocation. There's a little bit more in Australia than the rest of the countries, and that's kind of normal. We usually have some sort of home country bias. Having a look at their ETF list here on their website, you can see that most of them have pretty low management costs. All of them are below 0.5%, as you can see. And let me just quickly tell you which ETFs I actually have. So I have, like I said, I have 70% in shares, 30% in fixed interest. So my 30% are all in one ETF, these VAF, which is the Vanguard Australian Fixed Interest. So 30% on that one. Then for shares, I have 35% in the VAS of the Vanguard Australian shares, and I have the other 35% in the VGS, which is the Vanguard International shares. And this one contains both US and other countries in the same ETF. So those are the three ETFs I have. 30% in the VAF, 35% in the VAS, and another 35% in the VGS. Now, I cannot suggest that you have the same allocation that I do. I cannot suggest that you have the same allocation that we see here, or even any of these default portfolios that they have, the balance, the conservative. I cannot tell you which one is going to be the best one for you. That's going to be some homework that you have to do. I'm just sharing my experience from someone coming from another country and trying to adapt to getting a passive investment strategy running here in Australia. So back when I was preparing my portfolio, Vanguard was the best option that I could find. At the moment, I found another one that is pretty similar. You can even make a mixture of both options, and that option is BlackRock iShares. So if we scroll down here on the website, we can see that they also have these different allocations. They use less ETFs. They use mainly 4 ETFs. You can have a look at them here. 2 of them are for shares and 2 of them are for fixed income. And they allocate a little bit of money to cash as well, depending on which type of portfolio you want to go with. So again, similar story here. The ETFs are not exactly the same. They're not made exactly the same way as the Vanguard ETFs are. At least some of them are not. So again, this is some research that you would have to do on your own. And again, one of the things that you can definitely consider is to have a couple of ETFs from each and come up with an ideal solution for you. Now, the last thing you need to know is that to trade an ETF, which is a product that trades pretty much like a stock, even though it's a fund, you need a broker account. You need a third-party broker account through which you're going to buy and sell the ETFs. Or ideally hold them for a long time and then sell them later on. So I'm with CMC Markets because it's the one that when I was preparing my portfolio was charging the lowest fee, and according to this chart it still is. I have another chart here that shows IG share trading trading at $8 standard brokerage fee, but I don't think they make ETFs directly available, but that's something that you might have to do a little bit of a search for. So anyway, it's important to get a broking account that charges low fees. That's pretty much it for this video. I hope it has been helpful. I'll see you in the next one.